Okay, welcome to the midweek review for the week of March 4th, Wednesday of 2026. We've had a lot of price action that has scaled inside of the range of the weekly opening gap. And we hit both sides of the goals almost for the week on the downside for pretty much every pair we've looked at. So today, we'll just kind of focus on what the expectations are for the rest of the week. It's going to be a bit of interesting week because we still have some big news that we want to look forward to, that we'll need to look forward to. We have tomorrow, we have our unemployment claims. Let me go ahead and stop this. For unemployment claims tomorrow. Okay. We got unemployment claims tomorrow. They're coming in with an expectation of 215. The previous week was 212. And then we have the ECB president speaking. We might want to pay attention to this just to kind of see if they mention anything about the war, ongoing war, even though it's a U.S. issue at the moment. And then we also got one of the Fed members speaking at 1 o'clock as well. So I'd pay attention to that. Natural gas will be of interest because of the war as well. So we'll want to pay attention to this natural gas number. So keep an eye out on that. Our biggest number though tomorrow is going to be the unemployment claims. Then on Friday, we have NFP. And again, this will be one that we need to pay attention to. Also, not during our normal trading hours, but again, we got FOMC members speaking from 10:15 and 1:20. And then watch out for this consumer credit month over month number. We kind of want to pay attention to that too. That's going to be a number we keep an eye on. Then on today, we had light news, light earnings reports, nothing major. Same thing for Thursday, nothing major as far as earnings regards goes. And on Friday, pretty light as well. So nothing too big on the rest of the week as far as earnings. Our biggest focus is going to have to be updates on the Iran and Israel/US war and the ongoing events that are taking place with that. And then what we have on the economic calendar is going to be the ones we pay attention to. So let's go ahead and get on the charts. The dollar moved to the upside for us. We took out these highs, relative equal highs from last week, and we gapped open on the open. We pretty much only grazed the gap slightly and then took off from there. We got our whole move between Monday and Tuesday. We took the whole move and actually went well beyond it, which that's okay. We ended up taking out this high from the 21st of January. And we also wick these highs here from the 15th and the 16th of January as well. And then we took out this previous week high. That previous week high is from December 2nd. So our next level we want to kind of look out for if we keep pushing up to the upside, we can go ahead and get rid of that. There's a couple highs here, and then we have this swing high. This will be the last one that we focus on if we're going to continue to go higher. Let's get this pushed out to Friday. And then we have the weekly high so far. we got our first high we need to consider. First low we need to consider is the low we made from yesterday. This should probably get taken out. Should probably get taken out on this candle, but we'll watch and see. Yeah, it's looking like it's going to take it out. If not, then we have another swing low here. That is another daily low. And then we just turned bullish for the year on dollar, which is here. This we just crossed over this bullish price of 98,235. So that's going to be key, probably where we have our downside targets if we do drop to the downside, just to see how we respond to that area, right? Usually when we trade above the yearly, we usually have a retracement to some extent back down to it to try to tap it one more time just to check and see what's going on, if it's going to hold or not. So that looks like a good spot for that. Then, of course, we got price coming back into this is a fair value gap. I can see it better on the daily right here. So we'll see if price wants to come back down. Overall target should probably be back to the weekly opening. And then if we want to see some bounce, some price bounces, probably get bounces at the 3 or the 5. On the buy side, let's pull it back over here. Probably get bounces from the 3 or the 5 or somewhere in between. That's also roughly around the yearly price opening if we do get price to push down and then bounce and hold. That's where I'll be kind of looking for that. Then, like I said, we have this fair value gap, this new week opening gap from this week. Or it's the weekly opening gap from this week. And maybe we come back down into this range at some point if we do sell off, but that will require us to come out, take out these lows. Then again, there's a daily. It's going to be a fair value gap on the daily. Oops. You can see we can just pull this in. It's a daily fair value gap right at our daily low from yesterday or the day before yesterday. At this point, and that makes sense for us to get that clears up why we would get a bounce from there as well, because we would be coming back into the fair value gap from the daily. So this is our downside areas we need to consider. Upside, first area we got some trend line liquidity on the lower time frame that we'll probably be taking out. Main draw is the high of the week and see if we're going to stay get above or hang out below the high of the week, because that could be the high for the week overall. So it wouldn't surprise me if that was the case, that we don't make another high higher than that. But if we do, this swing high from before will be the target that we want to kind of maintain as the primary target. And let's just check the daily, see if we got anything else. There's some probably see a probably see a chance that we get up there if we get above, so we could basically account for these two highs too. There's probably a fair value gap on the weekly. Let's check this. No, not on the weekly, but there is an order block right here. And we are, let's check this. So there's the order block. We retraced into this. We took this high. We traded through this fair value gap to the downside. So now it's kind of a we could stay inside of this wick, which is why I think that we should probably kind of just maintain from there, that we focus on the high we made from this being our ultimate goal for the week. Since we already took this high and we're trying to kind of really retracing. So over the next 2 days, I will kind of watch how we play around with that high that we just made if we're going to stay below that high. And like I said, we could be just coming back into this fair value gap and then try to bounce from there. If not, this high was just taken. These are the highs we probably aim for after that as targets if we're going to continue to go up. So I hope that makes sense. Hope that makes sense.
Yeah.
We can kind of get rid of this stuff over here. We've traded through
Which
that.
indicator is this? That 3 month indicator?
It's the same. It's the same. The opens app.
Okay.
I just so you got the daily, weekly, monthly, 3 month, and the yearly.
Okay. And this is new, right? You used to use that
No,
DMWY, right?
yeah, I just added the quarterly.
Mhm.
Just added the quarterly. Um,
Mhm.
this will change when the next quarter opens, but it
Okay.
just so happens to be that we're in the first quarter
Mm-hmm.
of the year, so that 3 month is still within range right now. So
Okay.
that's why it's showing like that. Once we get past that, we won't be in that 3 month window anymore. It'll
Mm-hmm.
just kind of rotate to the next one.
Okay.
Yeah. So this is gonna be dollar. Let's get you over 344. I'm gonna just pop it up here, and then we'll drop the chart in the chat. Okay. Then we got gold. Gold sold off. We pretty much did our whole move to the downside. We did a portion of the move to the upside. We gapped open. We did our 0 to 1. We did our 1 2. We did our 2 3, and then we sold off at on the 3 4 move, right? So that's where this sell off started right here. And then we started to push down after we gapped through that, and we just collapsed on this move to the downside. Our main target on the downside move was the 5. The 5 was this coming down to this order block pretty much. And we pretty much came down to the wick right here. Basically is the same high of this candle. So the high on this candle is 5084.7. The low on this candle is 5084.9. So it just like kissed it and then retraced a bit. And then it sold off again. So, and one of the things that we mentioned was that there's a possibility that us coming into this order block and this inverted fair value gap, and that's basically what we did. The low on this candle is 5005.0. The low on this order block is 5005.0. So equal lows now. spot on. It's pretty like I love seeing stuff like this, and it's like real spot on because it just help you confirm that this stuff works. But now we got equal lows. This is equal low from this day and this week so far. And now we'll just kind of need to see if this wants to hold. Um, we can extend this inverted fair value gap out. Since we see that it's going to want to try to use this so far. And then we got a nice little small range between this high from yesterday and this swing low from yesterday. It's not the low of the day, but this is the range we want to operate in, see how we behave coming in and out of this range. So it's going to look like our downside target should probably be there's the low of this fair value gap right here, which we're still in, but now that's inverted, but I don't want to change it because it's a huge one. I'll show you where it's coming from. It's coming from here. We've already traded through it. Now we came back down into it. And the question is, now that we're coming back into it, do we use it to stay higher because it's inverted now, or do we continue to sell off from there? So that's what we'll need to look out for. The bounce, we can probably get it from, I think it'll come in between the 5 and the 3, but let's just say we bounce at 5. It could come anywhere between the 5 and the 3. So, and you see if we sweep 3, there's equal lows that we got from this week, and then there's another set of lows here. There's a small fair value gap on the 1 hour, and then there's also this bullish fair value gap that they've used already before to bounce off of. And let's just say there's a chance that we could do it again if we get back down in that range. So that adds some more reason for us to probably want to come back down there anyway. And we'll just kind of have to keep an eye on that going forward with gold for the rest of the week. And then worst case scenario, we sweep down below this previous week low. For the upside, first level we'll need to consider is the swing high we made. There's actually a little order block. Well, not a little, but there's an order block right here that's kind of keeping us down, but we'll kind of keep an eye on that. Let's check the 4 hour real quick. We do have a fair value gap right here to here that we probably get a better range from here to here from this low. Yeah. So this is from the 4 hour. And then we'll see how that plays out on the 4 hour. We got our high pretty much near the midpoint. We trade above this high. We get our gap. Let's go ahead and say we make at least to the midpoint of this. And then our 1-2 holds between this down move and this up candle. And then our 3-4 takes us into into our new week opening gap right here. And then once we get to the new week opening gap, we kind of want to see how this plays out at that point to see if this wants to take us through or above or hold it and to sell off from there, from 3 or the 5, if we can't get above it. If we can get above it, you can see we got swing high here. It's high day for Tuesday. It's Tuesday's high. And then this is the weekly high over here. You got your hand up, Cars? What's up, bro?
Hey, what's up, man? How you doing?
Good, good.
Good. Okay, so I got a quick question. Okay, when you just marked up your 0 to 1 move, right? I
Uh-huh.
noticed were you were you hanging out around that that double top right now? Okay, so
Right
right,
here.
no. Okay, so that's the high of the day, right?
This one.
Yeah, that's the high of the day, right?
Yeah.
So you took your 0 to 1 move from the low of the day all the way up to where you stopped your one mark at?
My zero starts at the close of yesterday, which is
That's
today.
uh-huh.
Today at 1600.
Okay.
That's where the zero starts.
All right.
My higher day, well, not so much the higher day, but my 0 to 1 is the 0 to 1 move takes out this high. Where
Okay.
I'm putting my one is pretty much in the middle of the 4 hour fair value gap.
Oh, fair back. Okay. All right.
Yeah. So I got my fair value gap high, and then the midpoint is pretty much right at the previous day high. In the
Mhm.
middle of that, you got your upper quadrant, which is right around 52, 59 area. And if we were to go, there's an order block right here too, over here. I can tell because of the way these candles are set up. So it's just not on this time frame, right? So I'm looking at the 1 hour, right? And I can see between these three candles, there should be an order block right there. So that's why I'm using my 0 to 1 move to at least get to here. Because I know once it comes to that order block, it's either gonna keep trading through it or we're gonna get our 1-2 retracement. So that's why I get those projections. Then if we get above that, our 1-2 retracement, we got this move right here, this order block right here. The 1-2 retracement comes down and probably wants to hold inside of this candle or these down candles right here. At least try to do it. And it could do something else, like go all the way through it, but we know for sure it'll at least come down and try to get to that. That's where I get the projection from. So anywhere that I'm looking at the projections, it's because uh anywhere I'm getting the projection is because I'm looking at the where there's a bearish impulse area, a point of interest. If there's a bullish point of interest, that's where I'm looking for price to come down to. You understand?
Yep. I understand perfect. Um, so I'm gonna talk to you after you get finished with the session. I'll talk to you after you get
Ask me now.
through. So Rajit kind of gave me a little strategy that he's been using, right? So
Mhm.
what I'm trying to make sure I understand is exactly where the order block is. So that's why I want to ask you after the session because I don't want to. I know everybody on already understand all that. So I just want to make sure I got a full understanding. So I ask you after the session about what I need to
That's
ask.
cool. I'll go over it when we get done with this.
Okay, cool.
Okay.
Okay, cool.
All right.
Yep.
Okay. So once we get our 0 to 1, we retrace the 1-2 down to the downside, and then our 2-3 should hold if we get the chance to right at or above the midpoint. And then our 3-2-3 high should come inside of this new week opening gap from this week. And the 3-4 should either push down or hold inside of here, or we get a move to the downside from here and get a rejection. Same thing with the 4-5. We get the 4-5 move. It's either going to take out these highs or we get the rejection from 5. So the highest probability is we get a rejection from 3 or the 5 in this case if we're going to start a new move to the downside. So this is a goal, and I'm gonna drop the chart in the chat.
Good evening, everybody.
What's up, man?
Hi, Wale.
Then we can look at VIX. VIX has pushed up and dumped for the week. So our projections were that, on the open, which we already knew because Sunday night when ES and the rest of the indices opened up, it pushed to the downside. So we knew that VIX would gap to the upside, right? Our gap, which I don't know why it's not on here, but we pretty much filled the gap almost on VIX. So this is that new week opening gap. So on Sunday into Monday, we gapped up, price shot down. We sold off on VIX, which means that we pushed up on ES. We gapped up again on Tuesday into Wednesday. We gapped again on the opening. So there's a new day opening gap right here. And we filled that day, right? Today, we feel that completely. So we're kind of in a neutral to bullish standpoint overall on indices. And we're kind of in a neutral to downside move on VIX because this is our low, this is our high. Now we're at the low and we got equal lows here. So we kind of just sitting at the middle of the range that we are kind of in right now. This is our equal lows now. We got some trend line liquidity going right here where we got some equal high, some swing highs right here. There's another gap opening right here from yesterday. So you can see like we're gapping up and we're probably going to gap down on, we're definitely going to gap down on VIX going into tomorrow. VIX should gap down. So with that being said, we already kind of know 0 to 1 push to the downside will take this low likely, and maybe even the lows we have over here.
Sorry, I missed that part. You said like VIX is going to be open down tomorrow, right?
It's going to open down.
How?
You can tell because, let me save this. You can tell this
Mhm.
because one, the VIX doesn't open till 3:15 a.m., right?
Mm-hmm.
And you can see that ES gapped open already,
Okay.
and we pushed up and made a high. So this move right here is on ES, is on NQ, slightly on Dow, right?
Mm-hmm.
When you see that, it tells you that there's going to be a gap or a push to the downside on the opening on VIX.
Got it. So it means if VIX is going down and then means ES and MNQ is definitely going up. So like
Yep.
bias is already decided for tomorrow, is it?
Not yet. No, because that's just the initial move.
Okay.
but it may change course, you know.
Mm.
So if you look at
Like after 8:30, right? When it will open again, then it can change that.
it could change at any point, you know.
Mm-hmm.
Doesn't necessarily have to do with the time or when or how. It's just to say that we know that there's going to be a gap because we already got price on the opening of ES already showing us upside movement.
Okay, got it.
So just like here, right?
Mm-hmm.
This is this is Wednesday, right?
Mm-hmm.
Wednesday.
This is Tuesday. Okay.
This
Mm-hmm.
this is Wednesday,
Mm-hmm.
right?
Mm-hmm.
And if we let's go to the 1 hour, we'll find Wednesday. This is Wednesday before. Hang on. Okay. All right. So we open at 3:15, right?
Mm-hmm.
You see where my cursor is,
Yeah.
right? Um,
Mm-hmm.
let me go back to the 5 minute. VIX open at 3:15.
Yeah.
You see, or at 3:15, we're at highs, right?
Right, right. Yeah.
We at lows on ES.
Uh-huh.
And you see on the 8:30, on the 1800 open on ES, we starting to push down, right?
Yeah.
And we don't open up on VIX until 3:15, right?
Uh-huh. Yeah.
So what's happening is from 8 until 3:15,
Mm-hmm.
the VIX doesn't have this whole move in place. It doesn't have any of this move.
Right, right.
So all of this move to the downside
Mm-hmm.
is happening on VIX. We just don't see it.
Mm-hmm.
So when this move to the downside is happening, there's a move to the upside that we don't see because we don't have that information.
Got you.
But instead of us getting that information, we get price to gap open.
Right. Yeah, so it means if I'm getting it right, like because this is going to be open up, so like again, like FVG, it will come down to fill that gap. So
Possibly.
if that
Yeah,
is come, sorry,
yeah, possibly.
yeah, possible. So if it is coming down, then it means again that MES or MNQ is going up, right?
Yeah.
Mm-hmm. Mm. Okay.
Because that's exactly what happened in this case too.
Mm-hmm. Yeah, yeah.
So where we gapped up,
Yeah, fill that gap and then make that FUG, then it
right,
moves
yeah,
lower, right?
right here.
Yeah.
Is that also predicated based upon the dollar?
No, this VIX is actually the best correlation, the inverse correlation. It's even better than dollar. It's literally it's literally low for high, high for low. Each swing. Um, and I can go into details of why that's, but it's don't worry about why it does it. Just know that it's. I think it's. I think I saw is 86 to 90% of the same inverse correlation, and can be even more accurate than that. So that's why I always say you can use VIX because it's literally spot on, right? If you see a high, you should be at a low on ES, right? You see where I'm hovering over at 315 time frame. We at a
Mm-hmm.
low. I'm at a low. You can see we at a high around the 5 o'clock time frame, right
Mm-hmm.
here. You see a lower low, you should see a lower high on or a higher low on ES. Soon as we make this high, this little sell off. This starts this buy up. We get our swing high right here at 23.73. We get a swing low at 18.13. We push down, we get a little small little push to the upside. Then we get another swing high. We get another little swing high that makes this little small little low right here. Then we sell off, right? Then once we make this sell off, we stop. We stop around. This is around 810. You can see at 810, we're at 22.20 on VIX. We're at 68.56.0 on ES. It worked the same way with NQ.
So,
Same that way.
means I got that swing is every time it's same. If this is making high, this is making low, right? Or vice versa. But uh, if you will see like 9:45 move in on VIX, right, on 15 minute.
9:45, 15 minutes.
Mhm.
From today?
Yeah,
Yeah. This right here.
yeah.
Mm-hmm.
So like that is there is FVG, right? Minus FVG is left hand side.
Uh-huh.
So I was looking at both, and same time in MNQ there is
A
uh,
bull.
sorry,
There's a bullish fair value gap.
yeah. So
Mm-hmm.
I was looking at that. So means I was like, okay, if this will go till this FVG and till that, then it will come down. So means you are looking like same, right?
Mm-hmm. That's usually the case. It's just like not only do you get same highs, same lows, but you also are going to get some equivalent bullish point of interest or bearish
Yeah.
interest.
Uh-huh.
Usually, they have the reset at 9:30, so that's usually what you want to look for on the 9:30 opening. That 9:30 reopening, right? So there's with VIX. Hold
Mm-hmm.
on.
Yeah.
And for those of you that don't know, there's two settlement prices on VIX. VIX closes at 3:30.
Yeah.
It reopens at 3:15
15. Yeah.
a.m. VIX closes at 9:25. It reopens at 9:30 a.m. And that settlement price will
And that's
give you
8:30 also, right? It close at
8:30 as well. Yeah.
yeah.
Well, not so much 8:30, but 8:30 is let me double check. I think that is a settlement price as well.
Yeah, 8:30
It's
means
the
I'm checking that. Sorry.
pre-market settlement price.
Okay.
And each one of those, hold on. No. Um, there's no settlement price at 8:30. But what happens at 8:30 is a huge volume of price comes into the market on news. So because we usually have a lot of volume comes into the market at 8:30, there's usually a gap at that price, right? It's gonna be at the 8:30 candle, 8:30, 8:25 to 8:30 candle. There's usually gonna be a gap. It's not a settlement price. The settlement price is at 9:30 and 3:15. And then those typically will give you a gap. But in this case, you didn't get the gap, but you traded into a fair value gap right here and then sold off from there. Just like you traded into a fair value gap and bought up from here on
Okay.
NQ and on ES. I don't think ES traded into it. Did it? Did it trade
It
into
had same. I think it was same.
I think it had the same thing.
Yeah.
Yeah, it had the same thing.
Yeah.
45. There's the fair value gap that lines up with this one.
Mm-hmm.
Then it traded into it and then once into it. All right, yeah. So
It means I want to ask like whatever PDR is, I'm looking in MNQ and MES1, same I need to see in VIX also, right?
Yeah, you should see the same or something similar.
Yeah, like, but if I'm looking at like 1 hour PDRs, so it should be here on 1 hour in
It
VIX.
should be on all time frames.
Okay. Mhm.
All time frames, you're gonna see that
Mhm.
there's something right there, right?
Okay.
It just may look different on a different time frame. It may not be a fair value gap. It may be an order block that's there because
Okay.
it's on a different time frame.
Mm-hmm.
And
Got.
then you also, if you see VIX taking out a high,
Mm-hmm.
ES and NQ should be taking out a low. If you
Yeah.
see ES or if you see VIX taking out a low, you should see ES and NQ taking out a high.
Right.
So this high got taken out right here on this move right here. I'm sorry, this low got taken out on this move, right? This is the 10 o'clock candle.
Mm-hmm.
There should be a high right here at 245 yesterday. That's this high. So at the same time that this high is getting taken out at 10 o'clock, there's a low getting taken out over here. You should always see those signatures carry out every time you see a setup. So a lot of times when you see VIX, like I see like on the 830 candle, you should be saying like, where am I in reference to VIX, and then where am I in reference to ES? Do I see a lows or highs near my current area? Do I see order block fair value gap on in my area that could be taken out on VIX and that lines up with ES and NQ? And then after that, it's just a matter of you deciding like which one is the best setup out of all of them.
Mm-hmm. Got.
ES or NQ.
Mm-hmm.
Really, honestly, when you start trading the VIX and the indices, you almost can strip everything down and just trade price action. I'm not even gonna lie.
Mm-hmm.
Like you don't even, as long as you see, all right, cool. I see. You can take every marker, everything off the charts, and just say, hey, what's my last PD array? Where's my last swing low? Where's my last swing high? When I come into this, am I going to react? And if not, I'll take whatever that trade is. You know,
Okay. Mm-hmm. Got it.
yeah. So, like I said, we should have our gap on the open on VIX. And there's an order block right here. There's a fair value gap right here. There's a swing low right here. So if we go to the downside, we know all this is at risk, and this should probably be our target. We got a swing low right here. If we want to come down and take out this one, this is a low from previous week right here. Previous week low. From the upside, right? Upside, we close here. If we get the 0 to 1 move to the upside, we at least take out these highs on the move to the upside. We could likely see price come all the way down into here. There's this fair value gap would be inverted at that point. So we know if we come back down there, we should be trying to retest this. And we also got the midway point from the weekly opening gap. So that's another reason why the 0 to 1 should push up above, and then the 1 to 2 should retrace and hold around here. Then our 2-3 move will definitely take out this high. And then we probably, if we haven't taken out these highs already, we'll take those highs, but then we should probably come to this high from today to take that high out. And that puts us above the monthly and the weekly and the daily from yesterday. So it'll be a matter of, do we want to hold here? We already traded through this gap right here. Even though we traded through that gap, we might want to use it again. So that's where I'm looking at the 3 to come to. And maybe even this 4-hour fair value gap, order block that we've already rejected from. So that's why I'm looking for the 3, or the 3 fails here, right? So one of these gives us our rejection for our 3-4 move to the downside. We could sell off from there to continue to the downside, or again, there's another order block fair value gap now that we can use to hold on the 3-4 move and push up from there to try to take out this high right here that we made. This is the weekly high for so far. And if we do this move to the upside, that means that ES and NQ should be crashing at that point. But right now they're forcing the market up. And that is the tone for the week right now. Let's see. We take out that low. Okay. This VIX.
Because when you're done with that, can you look up when you're done with your session today? Do you think you can show us some of those defense contract symbols?
We can look it up. I don't trade them, so I don't know them off the top of my head.
Okay.
But we can look them up.
Yeah, we can just look them up and I'll look at it myself.
Yeah.
You got it marked on it.
Yeah, no problem. Okay. So now we had Dow, right? We had a gap on the opening. We already got our 0-1 to the downside. We took out these previous week lows, previous month low, previous day low. We tapped the monthly, we tapped the yearly, and I don't think we made a new yearly low yet. Let me check. Yes, we did. We made a new yearly low. So we made a new yearly low on Dow for this year. This is our new low of the year. Now the question is, are we going to hold that low? That's the question. And so, like we mentioned before, 0-1, we got our 0-1 near the yearly opening price right here. That's where our 1 was, and we bounced. So our 1-2 gave us a bounce from there. But then once we got back into this gap, we sold off from there. So we didn't get our move to the upside. We kind of sort of did. We took out these highs and then we sold off, right? So this is our high for the week right here. And now we've at the top of our range for the week, back at premium. And you can see we're still sitting in the middle of the weekly opening gap. That's why I say we just kind of been ranging this week, even though we've had some huge moves. Most of the price action, with the exception of this move to the downside, has pretty much all been handled like inside of the weekly opening gap, right? So that's why I say we've been ranging. We got this swing low, which puts us back at the daily, the yearly again. And then if we sell off from the close yesterday, our 0 to 1 either takes this low out or we bounce from the monthly, weekly open / the yearly, right? So we could either see price push down to bounce from here or here, or we just come down to sweep this low from yesterday. So that's why I'm putting our 1 down here, because worst case scenario is we push down here to take this low. Now, when we get down here, you can already see why we could get a bounce from there. You can already see that because there's a fair value gap right here to the upside, and we got an order block right here. And you mentioned cars, like, how do you know what's an order block? And it's not so much that you got to know what's an order block and then which one to use, right? So those are two questions that you got to ask.
Okay.
You need to know that an order block is basically a series of down candles or up candles in the direction near a high for a bearish order block and near a low for a bullish order block. They can be anywhere on the chart. You can see them outside of those particular areas, but the ones you really, really want to pay attention to are the ones that take out a low or take out a high like this. So you can see an order block. It will be the last up candle in the last up candle before we get a sell off, right? And you'll see that that candle took out a high, right? So if you could be, in this case, we got a single up candle that takes out a high. In this case, we got a series of 2 candles that takes out lows, right? This is also an order block, right? This is an order block to the downside. It's a single candle in the middle of a move. Sometimes you can see that as well, right? This is a bearish order block, right? It's bearish order block. It's the last swing high right here. These 3 candles, these 2 candles make the bearish order block. And then when price makes a new low, even if it's a slight low right here, if you see price trade back into that, you could be expecting for price to sell off from there. This is an order block right here. These series of down candles right here. This a bullish order block right here is 2 down candles. Once we see price trade above the body of the highest candle that makes this order block, you know it can be used to go to the upside and continue to the upside. And if you, the ones you really want to look out for are the ones that have, if it's bearish, if you see a bearish or a bullish order block, you want to see the order block have a fair value gap inside of it. And that fair value gap gets inverted, right? This one has a bullish fair value gap in it from here to here. But it's replaced by a bearish fair value gap from here. Let me use a different thing. This one gets replaced by a bearish fair value gap. When you see this, this is a high probability setup, right? That's your bullish fair value gap right here. That's now inverted. And then you have your bearish fair value gap that replaced it. Once you see price come into this area, specifically where you get overlap of this, in this case, you can see the overlap being the low, the low where you get the bearish fair value gap and the bullish inverted fair value gap. We sold off from there. Just like over here, We have fair value gap right here. This was bearish. You know, this was bearish. Now it's inverted. And we got a bullish fair value gap right here. So if price come back down here at any point, I'm gonna probably look to see, this is probably where the 3 gonna go right here. Because if it comes down in there, I expect there to be a chance that this bounce back up from here. And this is the highest probability area. Not to say that it can't bounce anywhere else, because the 1 and the 3 are actually 1, 3, and 5 are all good areas to bounce from. But high probability says that somewhere in between this fair value gap with this area particular being the most sensitive area, so that we can see price push down and come into there. Your order block just basically is, like I said, 2 candles, 3 candle series, takes out a low. Once you see price trade above the body, you know it might be on and they might be using it. You look out for the ones that, if it's a bullish fair value gap, it should have an inverted bearish fair value gap inside of it. And then that should get overlapped by a bullish fair value gap. And then you look for where the overlap is and you look for price to come there. That makes sense?
Yeah, that make perfect sense. You know, so I just want to make sure that I understand fully what the order block is. You know, I've been reading and researching about, you know, making sure I understand it. I know it's a series of candles that right before impulse move, but we're looking at it as looking for at key points, like at swing points, where
Uh,
price could move in a different direction,
yep.
right? Or was there a
Yep.
change of character of shorts or something like that?
Yep.
Okay.
Yep. That's it. That's it. So now for the upside. Our 0 to 1, of course, we take this high out, right? I'm not even going to draw that on there if we do push to the upside. The next area is this high right here. And then right around that high, right above this high, you got the midpoint of this now inverted fair value gap. So this 49,250 area, that's probably where we get a high at for our 0 to 1 move. We could come into this area for that as well, but I'll say that we get the 1-2 retracement before we get that. And then we get our 2-3 move to go ahead for sure come back into the above this previous day high, which takes us back into that fair value gap, inverted fair value gap that I already talked about. Right? So that's that move. Then our 3-4 high probability area, we already sold off from here once. We get a high probability area that we sell off from there again. And then it either starts a new move down or we get our 4-5 bounce to the upside to take out this previous week high. Or even just this swing high right here. There's a couple things. I'll go over this. This is the other thing is we just range inside of the weekly opening gap. That's the last thing. But if it's just ranging, you can take some trades on that. You know, on the lower time frame, but you know, that's you know, you can look at that under your own terms on that. All right, so there's Dow. Now in Q, it's almost the same. We've actually traded out of this range though. We've traded outside of the new week opening gap so far on in Q though. So at this point, since we've traded outside of it, the question is, will we continue to try to use it, or will we just keep pushing on NQ? Let me bring this over a little bit. So this puts us back into a bearish fair value gap, right? And this bearish fair value gap, we've already sold off from it already, right? So now we know we're inside of this bearish fair value gap. Let me clean up a little bit of this. We don't need this anymore. We took that low. We bounced off of this new week opening gap, this new day opening gap over here. On the downside, that's where we made this move from. We took this low, set the weekly low over here. So we got our weekly low for the week so far in place, and then this is the low from today. We got another swing low here we need to consider at some point, maybe not today or this week, but we need to consider that. And then we got a fair value gap right here, but it's probably better on the 4 hour. Yep. Probably it's cleaner on the 4 hour. Okay. So our 0 to 1. First thing first, we deal with this this fair value gap. Our 0 to 1 could take us probably down to this order block. So we could come all the way down to this order block on this 0 to 1 move, right? If we get this to continue, our 1-2 retracement trades us back into this fair value gap, and then we sell off from there if we get inside of here and see rejection. Our 2-3 move takes us below this low, back down to likely the monthly, weekly opening price. And that puts us back in the range of the weekly opening gap. And, you know, this 2-3 move will take us back in the range. There will be a fair value gap in between this 2-3 move. So our 4-3-4 move, when it retraces, if it does retrace, that will take us probably somewhere back inside of the that'll hold somewhere inside of this weekly opening gap. Let me extend this out. That'll hold somewhere inside of the weekly opening gap. And if we get a fair value gap to the downside through that, we could likely get a bounce off of our 3. Our 3 is high probability area because that means we come back to the weekly, we see a bounce back up off the weekly. Our 4-5 move sells off like roughly right around where we got our 1. Our 4 takes us back down through these lows that we just took out. And then either we trade through this low right here and take out this low, or we hold around the around this new day opening gap right over here. Since we've been holding inside of that, that'll probably be the first. The 5 can go worse. It can get worse than this, mainly because we got a lot of news. So it could get worse than that. If it gets worse, you already know that these are going to be our targets all down here, right? So it could definitely get worse, you know. Keep that in mind, right? Could always get worse because we got the conditions for the market to go down very low. But they're buying the market up. They're dip buying right now. So you have to take it for what it is. I think this week I learned a lesson, like just because I think it's supposed to be doing something doesn't mean that it has to. And I think that lesson for the day, for the week, this week, kind of threw me off because from a sensible standpoint, price should be price should probably be, to me, in my opinion, price should be down here around 23,500 at this point because we're what just happened this weekend. But you know, that's my personal feelings, and my personal feelings got in the way of me making a lot more money this week. So, um,
I
and
made same assumption, but yeah, it's going up.
yeah, yeah,
Mhm.
my personal feelings kept me stalled out this week, and I'm okay to admit that. And that's just a reminder to trade what you see and not what you think and not what you feel. So that's my reminder for this week and going forward. That was something that I couldn't swallow for pretty much this whole week. Uh, that we were actually trying to bounce for some reason, even though a lot of people just died, a lot of people stuck, a lot of bad things just happened this week. So it left me like almost stalled out to where I couldn't trade a lot this week because of what happened. So um, keep that in mind. You know, it's a lesson learned. You know,
Mm.
that's something we can all like take into consideration going forward. And I don't feel bad because I didn't lose money. You know, I didn't lose money, and that's the real when whether whatever the reason why I didn't trade, I knew I didn't feel the way I needed to feel on the charts, and I'm okay with not trading if I don't feel like I understand what's going on. And there's nothing wrong with that, you know. Everybody know I got a lot of personal stuff going on right now, and you add that on top of some indecisions about what is happening in the current geopolitical world right now. I don't think that was a bad thing for me not to trade that much this week, you know. And it's NFP week, so that's all craziness, right? You know. So the upside move, right? 0 to 1 takes us back into or near this new day opening gap. And this gap's important because this was one from last Wednesday. We had big news on that particular day. That was when the Nvidia earnings came out and failed. So we'll probably trade back into this and get a decent response on that. Whether it's good or bad, that'll be a pivotal area for us to see how price wants to react from. So that's why that is going to be where I'm looking for my first high on this. This could also be the 3 as well, but I think that the 3 stands a better chance of happening after we get our 1-2 retracement when we first get a response from this area. And our 1-2 retracement holds, there's a fair value gap right here. I'm not going to draw it because it's already overlapping another one, but that holds inside of that range and inverts this again, inverts this, and then our 1-2 holds around here near this old high, and then our 2-3 takes us above this, through this, through the yearly opening, and then we get around the yearly opening price and make a decision at the yearly. Do we hold or do we sell off from there? So that's the reason why that's the highest probability area.
So
And
today's like FVG in NY that
yep,
can also push up, right?
yep, mm-hmm, yep. We could also push down our 1-2 could also come down in here and then go from there too. But um
Mhm.
that's another option too, because sometimes we see the high swept and then we go into liquidity and then we go. But for now, this is what I will look for to the upside on NQ. And I hope that makes sense.
Yeah.
Let me grab this. Yeah, typically I am too, Wale. Wale said I go into the day neutral. Typically I am, man. But I don't know. This week I have been susceptible to just a lot of my own opinion this week. So I can usually ignore those kind of things, but it's not been the case this week. And it is what it is. I'm not mad. Like I said, I didn't lose money, so I'm gonna take that as a win too. Got similar situation on ES, right? So going into the opening, we had our 0-1 take us down here into this new day opening gap. Our 1-2 retracement pushed back into the range of the gap and sold off. And we got our 2-3 move here. We got a bounce at the 3. We said that the probability was that we get a bounce at 3 or a bounce at 5. We got a bounce at 3 and we got a bounce at 5. The bounce at on the 3-4 move actually took us above this high. So this could have been looking like it was going to buy at this point, but overnight session just sold off to get the 4-5 move. But this 4-5 move was well overly exaggerated, right? Because this was our 3-4 that pushed all the way up here, and then we sold off. So this was an overly exaggerated. So this actually looked like this for our 4-3-4 move right here. 3-4-5. Then we got our 5 to bounce where we thought it would bounce, which we said it would take out this low and take out this low that we made on 3. And then we probably hold around or try to move around the yearly low. But in this case, we took the yearly low and we took this previous day low. So
Hey, are we trading the wrong session? Look at that candle.
yeah,
That is ridiculous. I'm kind of mad. Dang.
going. Then we got the yearly low. This is not a yearly low anymore. Yeah, this tanking. This is tanking. Um, if we can get it set up. This our new yearly low. I'm gonna go to the 5 minute in a second. Save this. This little 5 minute OB. This one too. If we can't trade above these two, I wouldn't mind taking that. This one more so than anything. And we got a little little fair value gap right here. And there's liquidity. Liquidity already getting taken right now. I would keep an eye on it. And then 15-minute. That should take us. Should take us down into here at least. And then at this point, this might be gone, honestly, because we already had a shift.
Because there was an I took a trade on that today on the upside from the start of the day. Around about 9:30, I took that trade. I did pretty good, but I ended up giving some back when they started making that shift to the downside right over there.
Yeah, I can see it. I see
Yeah,
it.
well, I got stopped out. You know, so
Yeah, I can see it.
so
You
now
just
that well, it's about to fall back down. Right?
yeah, it looks like it. Looks like it. This is another example too. Order block, fair value gap, inverted fair value gap. This is your order block right here. This is your bearish fair value gap. It gets inverted right here on this candle. And then it comes down into it. After inverted on this candle, it come back down into it and it hold. The main move happened right around here. And you got three confirmations. You got the inverted fair value gap, you got the bullish fair value gap, and then you got the weekly opening, new week opening gap low. So we could have price coming back down over here into this area too, or we just hold inside of this gap right here. So if we're gonna be bullish, I would look inside of this area. These two areas I got drawn up to see if we're gonna hold, because this could just be a sell to buy at this point.
Drop that in the chart too. Corey.
I'll drop it.
Okay. So let me ask you this really quickly. So if it do make a shift back down to the downside, right when you got areas drawn, we consider that like a liquidity pool, right?
It swept the liquidity already.
But it's still making new liquidity though, right? I mean, it's still some liquidity down at the bottom over there.
Over here.
Yeah.
Yep. And then, like I said, right now, from a lower time frame perspective, you got these fair value gaps right here to the downside. This one right at the daily, so you know this one might get used right here. This one right at the daily. This is the last order block that pushed it down below this gap. I mean, below this low right here. And then there's a small one that probably won't get used right here, but it's a chance that it could. So if you wanted to try to take a sell from here, you would probably want to look for a sell right around here, inside of here, or inside of here. If you were going to look for a buy, you would first want this to make a low. Then you would want to see price trade up through this, because right now this is still bearish, but you would want to see price trade above this candle, and then you would want to see the fair value gap to the upside and trade through there like that. It'll be this cycle repeated over right here. This same cycle. Like if I was looking at this the same way, it would be like, okay, there's a high, there's a high, there's a move to the downside with the fair value gap on the inside of it. This is a fair value gap right here. There's an order block right here. There's an order block right here. I would have been saying, okay, if it's going to sell, it's going to sell inside of here. This is a bearish order block right here. You can even add this candle right here. This is the bearish order block. There's a bearish fair value gap. Once price make this low, we've swept liquidity on the lower time frame right here. We make this low, we trade back into it. It sells a little bit, but it don't go any lower. That's a sign that because we didn't take this high out, we probably pushing back up above. Once we make this high, and once this candle get traded above right here on this candle, that's your confirmation that this might be going to the upside. Now this is inverted. This fair value gap got inverted by this bullish fair value gap. Price make these highs. We trade back down into it and we hold. Most of the price is held around this overlap right here. The overlap of the bearish inverted, the bearish fair value gap that's inverted now, and the bullish fair value gap that's new. That's this blue box. And it hold inside of there. And then it's just going to want to go take out the next high, the last high we made, which is right here. And then make a new high. There's another high that got taken out over here, I think. I don't know for sure. So this would all be the same cycle happening on this leg down if we're going to stay bullish. If it's going to be bearish, it's going to just use one of these levels right here to just sell off from there and keep going. Like right here. So this is a high. This is a little on the 1 minute. The same thing just happened on the 1 minute. Right? We made our high. This is our order block. There's a little fair value gap right there. So if you look at just this little area right here, this is an order block. Right? Then this is a bearish fair value gap right here. This made a new low. It pushed up, sold off. Then we started stepping down. There's a fair value gap right here. We made a low. We traded back into it. We traded around. We sold off, right? Then there's an order block right here. There's an order block right here. They didn't really use this, but then there's another order block right here. There's a gap right here. There's another order block. We traded down. We made a new low. And right now we're not even really using the fair value, using the order blocks on the rest of the leg down, because we ain't really got to, because everything's already one directional. Right? We did use it here, but we didn't really stay there long. That's an order block. This one's an order block. We traded into it right there, sold off right there. Then this one's an order block right here. There's a small little swing high right here. Then we traded down below it. We never really came back into it, and we kept going. And you will see this keep happening until we reach our liquidity, which, all right, we took liquidity out right here. Then we paused, we went sideways for a little while. There's a 1 minute fair value gap. 1 minute fair value gap and order block over here, right? At this last swing high, we took out that low. We didn't trade back into the order block yet. Then we took out the higher time frame liquidity. We took out more liquidity when we made this move right here. We took that liquidity out. Now, up candle, order block right here. Again, that's the one I already got. Now you can see we trading away from this level that we just had. This the 1 minute fair value gap. We traded into it. We sold off from there. We took out this low. And then when we took out this low, we also took out that low. So now that we've taken out all these lows, it's like, okay, cool. Are we going to use this fair value gap and this order block? Because we just took out this low, it's a low probability. This one's usually, the first one is usually a weak one. So usually what'll happen is they'll trade through this one, sweep this high, trade into this one or this one, and then sell off. But we could still sell from here, but that's just a possibility. And what I would recommend also is like just go to the 1 minute chart and just study this. And you can see it quicker on the 1 minute chart because it's happening more frequently on the 1 minute chart. That makes sense? Tracking? I hope so.
Tracking.
Yeah, I mean, the CD. I'm sorry, Anna, go ahead.
No, it's okay. I was just saying I am tracking.
Okay. All right. Okay. So now back to the setup. All right. So our 0 to 1, we already starting our 0 to 1 move as we speak, right? At this point, 0 to 1 takes us preferably back down to that weekly, or we hold inside of this fair value gap or this order block that's right here. I'm not going to draw all that, but that is there. Then, if that's the case, our 2 holds inside of this weekly gap and we don't get another high, right? And then on our 1-2 retracement, our 2-3 takes us below these lows right here and maybe even below this low into this fair value gap. That's a high probability area where we get a bounce from at the 3. So it makes a lot of sense for us to get a bounce at 3. This is a previous day low. Get a bounce somewhere around this little area right here. And then we come back into the range and see where we want to go from there. If we can't get the bounce on the 3-4 move that continues us higher, we reject back near the weekly opening gap low and the weekly opening price. This means we turn negative for the week if we go ahead and sell off from here, which would make sense because right now the weekly probably looks like a doji, probably like a small bodied bullish candle at this point. And then we get the 4-5 sell off to take out this low for sure. And we trade at or below the yearly opening, the yearly low we made this week. Worst case scenario, we continue to take out these lows down here, which could happen. There's the previous week low as well. So we could be targeting this low as well. So that's also a possibility. Just not sure if we're going to go that low for the rest of the week, but we do have catalysts that could take us down this low because we got NFP and we got unemployment numbers. So if we were to, it's still understandable that we go ahead and take that out. Now, upside, right? We have already taken out this high from yesterday. So this is our high. The other high we have is this is the high of the week right now. And then we pretty much got equal highs because we have this other high from a previous day high that's like right above it. So those pretty much equal highs. I'm not going to draw it as an equal high, but that's your high of the week, right? You got this swing high and this swing high. These highs are just like all stacked up right now, right along here. So that's a lot of liquidity in this area right here. This happens to be inside of a 4-hour fair value gap. So that's something that's definitely a reason for price to want to come back down into that area, come back up into that area because we're inside of this 4-hour fair value gap right here. So with us being in that 4-hour fair value gap, that's where I'm looking for my 0 to 1 to take us through these highs. At least these first two highs, and I'll just extend that to here. Then that puts us above the yearly opening price, which NQ is already above the I think your NQ is above, is open. Let me see if NQ above the weekly. No, NQ is not above the yearly. I'm sorry. Dow is above the yearly. Dow is open above the year now. This would put S&P above the yearly opening price. And then if we're gonna hold, we're gonna hold on the 1-2 retracement near the yearly, and then our 2-3 move takes us higher into this bearish fair value gap, and then that puts us back near this same NVIDIA price point. NVIDIA sell off over here, and that's going to give us our 3. And then we should get a hold at around the high, and this will be an order block on the 1-2. Our 3-4 should retrace down there. If it's not going to hold, we'll get the sell off from there. And if we don't get the sell off, then ES goes ahead and push above here, and that puts us back near all-time high. Highest probability is we get the sell off at 3 if we push up. If we get an all-time high under these conditions, I'm just gonna be baffled at that point. Like, I'm gonna be like, I know you got to stay neutral, but again, like, if you don't understand why it's doing stuff, sometimes it's better to just stay out of the market. And if we get an all-time high under these conditions, I'm just gonna sit out until I can get take a better approach of what's going on in the market. So that's just my personal thoughts and opinion on it. Maybe, I'm definitely not going to go in with as much risk as I would normally go in if we get to the point where we're starting to make all-time highs like this. To me, the fix is in at that point. Like, this is not, the fix is all the way in. So that's just my personal opinion. So that's not any advice. That's just, hey, the fix is in. Fix is in. All right. So the last thing I'll do is y'all said y'all want to see the defense stocks, right? The defense stocks. Let me go to a different chart. Let's Let's go to lose chart. Okay, so this is Lay dropped a couple of names in here. Key Martin, of course, is up. It's straight up, of course. Start killing people, and this is what happened with that.
Damn, man, you make that sound so good.
It is the case, though. I'm
Yeah.
making it sound like reality, so
Yeah.
I hate for that to be the case. But you
Yeah.
start killing people, and you see like,
Dogs go wood, bro.
um,
So as you look, Corey, you just brought up a very good point. Somebody that I knew asked me about morality in trading these,
mhm.
right? So what's your opinion on that? Because they almost got me to sell Tesla when I had it at $45 because of what
It just depends on you, man. Like, I'm a person of morals, so it's just certain things that I can't see myself like entertaining, right? And it's just kind of on you at that point. Like, and for us, like, we know how to make money in so many different ways. So it's like I don't even have to look at this stuff because I know how to make money in other ways that I don't feel so bad about, you know. So it's kind of on you on at that point. Like, I won't buy a Tesla, right? I cannot stand Elon Musk. So I'll never buy Tesla stock. You know, if it could go to 8,000 points, right? I don't care. I'll just, I'll make that money back on something else, you know. I'll never buy Target stock, you know. So I'll just have to make that money back on somewhere else, you know. And am I technically still trading it by trading S&P and NQ and all those? True, I am, but I don't. I'm trading the broader market, in
Yeah.
that case.
So
Not,
that's like the umbrella for all the other markets, right?
yeah, yeah, yeah,
Okay.
yeah. I I'm not trading Macy's, but as soon as they did what they did to me, I should have been shorting them because they already down a lot more than they were at when they first released it. But I will be shorting them going forward. Though. I have a personal vendetta against them, so I will be shorting them for real. But on petty, I am definitely petty on that, and I don't care. I don't even care. Like, I can't wait to find a good entry, and I'm gonna actually spend some money on those calls. Like, I ain't even gonna lie, I'm gonna spend a lot of money on those calls just so I can short them, especially over the summer. I know they're gonna tank over the summer, so but that's a whole nother story.
That's
That's
technically not inside information, right?
no,
Oh, okay.
because my reason for doing that is because they did big layoffs and they don't have anything. Summer is usually slow markets anyway, so for retail markets. So I'm not giving y'all technically I'm not giving y'all insider information. This is just based off of seasonality. So
Yeah, that's like a market trend, right?
yeah,
Yeah.
seasonality. Retail tends to suffer in the summer. And just because I got a personal vendetta against them has nothing to do with seasonality. So right now, we're just straight up. We've been straight up all year. So all I can say is we got a gap. See how holding the gap. If it want to push higher, you're gonna aim for the weekly high. That's what it looks like on Lockheed Martin. I actually got a personal vendetta against them too, but I'm not gonna take
Yeah,
it
me
out.
too. You know what? When you're doing some trading, you should have some morals though when it comes to that. You know
You
what I'm
got
saying? Yo, you know what I'm saying? Lockheed Martin has never been a company that's been beneficial for African American people on its
hey,
own.
I
So,
mean, you gotta have your limits, man, and whether or not that's Elon Musk or
I can't stand Elon Musk.
or you got it. I would never buy Donald Trump's stock
Oh
or
no,
his
never,
Truth Social stock. I would never buy that.
never.
There's nothing in my body and soul that would make me purchase that. And even with the idea of taking my feelings out of it, I can never do anything along those lines. Palantir,
Oh,
Palantir is looking like we got this low that's gonna hold. It's the low of the year right now. Um, there's an order block on the weekly right here, but that's been rebalanced. Let's look at this. There's a gap right here that we about to get ready to come into here to the downside. Um, I would watch how we hold price in this area. Watch how we hold this gap. See if we're gonna take it out. If we don't take it out, we sell off from there, and then we come to this previous day high. We look like we maintaining this low. So either we reject from here, or we push up to here, hold in here, and push up higher from here. So we're gonna do either one of those. Don't matter how it happened. That'll probably be what we do on this. This a pivotal area. This gap right here. This last big sell off right here. So either we're gonna trade through this and hold this area and then push higher, or we're gonna sell off from there on Palantir, or we just gonna go sideways. Then you got do y'all want these charts?
nah, man. When you said that little bit, that kind of turned me off of that one, dog. You know, I'm good on that. I am anyway. I don't know. Can't speak for nobody. I'm good.
Okay. Gotta have some morals, man. Um, gotta have some morals, man. And it's funny that you asked that because it's a great show. And you know what I'm about to talk about, Wale. The best trade show in the world. Like matter of fact, I'm about to watch that again, and especially the early seasons.
What,
Billions,
what what's that?
billions, billions.
This so-called billion?
Yeah, yeah. Billions is the
Well,
best
that's
show,
the best show ever.
the best
I
show
ain't
on
gonna lie.
trade ever. Because it gets you in the head of what you would see as a hedge fund, as a floor trader, the kind of things that they do and talk about. It opens your mind up about and put you in a whole new world. Like that's really because the main reason why, and I'm gonna give something away because that'll tie into this, right? The main reason that Axel made money is because he sold stocks during a crash. And that's the main background of a lot of the reason why he made money because it was during a tragic time. He shorted the stock and made money. And he put his company into a big place off the firefighters. Yeah, they had their money in a fund and he shorted the fund. And for the majority of the show, those firefighters was pissed off at him for doing that. But it made his company a whole lot of money. So in that show, you get mindset, you get to understand market makers, you get to understand hedge funds, you get to understand how politics plays into everything. You get to understand just all sorts of aspects about trading. You get to understand how quants are built, how to do how SEC operates. You get to see how a trading coach operates. You get to see how politics enters into trading. You get to see how uh agriculture, right? Agriculture gets into trading. How does I mean, you the list goes on, bro. Like you can see all kind of stuff. The Chicken Man, I remember him, right?
Where you watch that at, Go?
It's on Showtime Max,
Showtime.
HBO Max, I think at this point.
Okay.
Especially in those early seasons, right? Those early seasons talk the most about day-to-day trading. Then after you go into later season, you go into more things that like I think at season 6, it goes into the process that he's take to try to make a bank. Like even into those details. Like the shit just so like mind blowing that you can get to learn this from this show. Like that's literally like that's the trading from the higher aspects, from professional trading aspect, all that stuff that goes on. Yeah, real estate, property. It goes into so many different things that got to do with trading and money in general. Like it's like it really should be a trading course. That show right there, like that's how good that show is, man. And I'm about to watch that junk again, man. I think I done watched it like two times. I still ain't finished it. The last couple seasons. I think I'm on the last season. But I think what I'm gonna do is I'm gonna just go ahead and finish the last seasons and then start it over again. Because I feel like as long as you trade, you probably need to watch that show like at least once a year. Would you agree, Wale? Because I know me and you both on that already.
I'm not even gonna lie to you. There's some episodes that I watch. If I have a bad day, if I have a good day, you have a character on there that's an actual professional coach. And
Yep.
she knows every tendency of every trader in the entire business. She knows the tendencies of the CEOs. She
Yep.
understands the tendencies of like opposition. It's it the show just made me understand that trading is deeper than what you think it is
It's
on
deep, bro.
every level.
Like this a whole religion, bro. Like
On every level.
it's like it's like the answer to everything, honestly, bro.
But
Like,
but there's one character that you underestimate, and it's the direct assistant to the boss.
mm-hmm.
You want to talk about morality? He has no soul, and he
None,
knows it,
none.
and he will do whatever it takes.
Yeah,
I'd never want to be that person.
never, bro.
Jesus Christ, help me.
Never, bro. Never. And it goes into this same question, like, would I trade a stock that I don't support? There's definitely some, and that's early too. That's early. Like first episode goes into that whole concept, right? So yeah, I'm about to watch that again. I'm gonna finish this show because, and then I'm gonna watch it again. Like right. Matter of fact, let me key it up on the television right now.
So I don't, Mr. Miller, I don't know you personally, but
Both of these dudes, my cousins.
oh, okay. So what's up? Um, so I'm gonna say it like this. Um, do you know who Ian is?
Ian,
Yeah, I think he out there in Atlanta.
Ian
Black dude.
Dunlap.
Say it again?
Ian who?
Ian Dunlap.
Yeah.
The name sounds familiar, but what he do?
So he's an investor. He used to work in Wall Street.
Okay,
About 6 years ago, about 2020, right? He came out with a list of stocks that people needed to like invest in. And out of those 10, he wanted you to focus on four,
okay.
right? I think that's a better avenue than this because this is gonna die. It's gonna die out and it's gonna help you. This is not gonna help you sleep at night. I'm telling you right now. You're gonna make money if you want to go into one of these. But
Yeah.
Well,
I
you
would
know,
so
me
again?
personally, my top four people that I usually don't say I really hate nobody, but the top four people that I really hate is Peter Thiel, Elon Musk, Donald Trump, and that motherfucking press secretary for Donald Trump. I can't stand that, bro. I want them to lock her motherfucking ass up.
They got cooked
That's,
today.
that's just me personally. I'm sorry about that. Me
No,
personally,
you
I
good,
just
you
can't
good, you
stand
good.
her. Every time she get on TV, all she do is lie. So, and I don't like Kristen Noem either. I work for her, so I can't stand her
Um,
either. She the one not even paying us right now. So
okay.
can't
So let me
stand her.
I'm gonna look for that. There's an article, not an article, there's a video he put out today. Just go into those because Nvidia's on there, Apple's on there, I think Google, Microsoft, right? But you gotta Corey taught me this a long time ago, right? So there's certain ones that move fast and there's certain ones that move slow. Like people don't think about paint. People don't think about, wood, Home Depot, Lowe's,
Yeah, right.
certain time. So again?
I said I'm agreeing with you.
Yeah, certain times a year, certain things move, you
Yeah.
know, stuff like shit, copper. I don't know if you're using your own money. Copper like $6 an ounce right now. That's gonna go up, right?
Absolutely.
So we
Mm-hmm.
gotta think outside of the because this is trendy. This is, it's like meme stocks right now, just to be in one of these. But these people then they already invested. I was reading something today. There's something called I think Poly. You can go online
Poly market.
and gamble
Mm-hmm.
about certain things. Certain
Poly.
people gambled
Yeah,
25, 24 minutes before the strike happened, and they multi-billionaires right now, millionaires.
that's
That's
right.
Mm-hmm.
all inside trading that they doing legally right now,
Mm-hmm.
Yeah.
right? So, are you still recording, Corey?
Yeah.
Oh
Mhm.
shit. Um,
Let
shit,
me let me close this out though. You're right.
yeah, shouldn't be saying
I,
none of this, right?
I want to say some stuff that I don't want on camera. So
Yeah, let me stop talking.
I already actually said some stuff I didn't want on camera. So I might have to chop some of this off. But